This is an Investor Ideas exclusive podcast series with founder of Stock Analyst Guru, Richard Lazaro. Richard has years of an institutional equity experience as a stock analyst, portfolio manager, and stock trader. He's managed stock positions at hedge funds and other investment groups in New York. In this weekly podcast series, you will hear insight on learning how to trade based on support and resistance, market updates, and sector close-ups. For the full educational experience, you can check out stockanalystguru.com.
Hi folks, this is Rich Lazaro coming to you from Stock Analyst Guru for Investor Ideas. Today is Tuesday, August 14th, 2018. As usual, we are reporting about support, resistance, and trend of the overall market averages and of the major market sector ETFs. Today the S&P was up 18 points or 0.64%. The Dow was up 112 points or 0.46%. The Nasdaq was up 51 points or 0.65%. Roughly the same as the S&P. And the Russell, or IWM, was up 17 points, or 1%. The import of this is that the Russell was the outperforming exchange today, or your sector ETF, let's say the IWM. It opened up today and then just kept going. It took off and just wouldn't stop. I believe that was on the backs of very good earnings reports from the retail sector and other important sectors to the group, which also opened up and took off. The triple Qs actually opened and went down to almost yesterday's low, unlike the other, certainly the IWM, which was strange that it was going down against the grain there, but it acted like it did not want to go up. I believe there was some pressure being put on the group from the three horsemen, the triumvirate of cloud, software, and cybersecurity, which all three went below yesterday's low and opened up and were just trading badly in the morning until they caught on to the program and sped up and up nicely for the day. In addition, XLK, the technology sector exchange or ETF, also went below yesterday's low, unlike most other sectors. So really had some struggled at the opening, but also closed up 0.62% today, roughly in line with the triple Qs. So it made up for that lost ground. Crude closed down 8 cents today, or about flat, but was up almost $1 today on the gap up in the morning. Gapped up over yesterday's high, and then spent the rest of the morning trading back down and closed that gap, and then went sideways for the rest of the day. The 10-year bond closed up 1.8 basis points, closing at 2.895%, still under 2.9, and certainly under 3%, which is like a magic number here, keeping a lid on interest rates. Sectors of note, the SMH closed down 0.24% today. It's probably the only sector that was down other than gold, the GDX. On the upside, XRT, the retail sector, was up a whopping 2.25%. Consumer discretionary, that's like PSCD, the small cap consumer discretionary, was up almost 2%. PB&J, which is the dynamic food and beverage, up 1.3%. Some huge gainers out there today. Even the financials were up 0.94%. Looks like they could hold here and kind of be considered in a semi-uptrend, I guess, if we hold yesterday's low, certainly, which is around 27.75 or so. Home builders were up 1% today. But let's really look at an analysis here. The PSCD that I just mentioned, the small cap consumer discretionary, made an all-time high today, while the Russell, or IWM, is definitely has a cap on it right now and is under resistance. The Russell closed just under resistance here today, which is why it stopped at today's high, because that's right at the ceiling. If we go up over today's high tomorrow, or sometime in the rest of the week, that would really take the lid off of the Russell and maybe pave the way to make all-time highs, which are really not that far overhead. If you notice in the S&P, though, today's high was also yesterday's high, where we faded from yesterday to create those lows of the day. We were only able to attain a double top there. So today's highs are resistance. So if the futures open up tomorrow over today's highs, around 228.43, 44 at least, that might clear the way, or should clear the way, for a run back up to the 2860 area from which we fell to test that again. Then we'd have to vault that with the futures. That's what the market usually does to get past strong resistance. Overnight, the futures just kind of dance right through it without any major resistance of the whole market. And then once the futures are above that important level, then everyone says, okay, we're off to the races, and then they just buy it. Usually it's the futures that do all the heavy lifting. Kind of amazing. And if we open up under 28, 37, 36, that could mean, and we're going to go back down to the bottom here. Some more interesting insight here, I think, is that Invesco's Dynamic Leisure and Entertainment ETF, the PEJ, is at a 3-month low and is just about bouncing off of the 200-day moving average today, while the rest of the market is at either making new highs or very close to new highs. This sector is very sold off. The reason for this is that a number of their holdings like Hilton, Booking.com, Marriott, LVS, which is Las Vegas Sands, Wynn. A lot of them are tapping their lows for the month. A number of them are at their lows. For example, Hilton is just tapping its low for the year. Booking.com is making new lows for since I guess February, March, falling from a high of like 2,200. It's now at 1,833. So off almost $400 there, which is about 20%. Marriott is at a low for the year. Wynn is made a new low since, let's call it October. Folks, you do not want to be shopping on the new low list for stocks. Don't think that they're on sale and that you're going to make a better return because these things are cheaper. That's a bad way of thinking. You do not buy what's going down. You let it keep going down. If it's on the new low list, the chances of you grabbing it the one day that it taps its low and it starts turning around and makes new highs in no time are like 1%. Be shopping on the new high list, but you need to be aware of the valuations. You can't just be buying something that's 80 times earnings because you think someone's going to buy it from you at 100 times earnings. That's why we do fundamental analysis. Think of it, though. You don't buy what's going down. You buy what was going down and is now going up and shows you that it's going up. And that's what we teach here at Stock Analyst Guru. Lastly, let me throw this out there. Domino's Pizza today rallied back to its highs of about $2.95, which was yesterday's high, and fell off of that today. So in a strong market today, the stock was down a buck, but still it's showing resistance from its all-time highs. It did trade down. The stock did to under 260, and just in the last 2 or 3 weeks zipped back up to 295, but it's getting rejected from there. We need to look at the valuation here, but that I'm not interested in buying that as it's falling from resistance. Certainly, if anything, I'd be shorting that. If you own Dominos, it's not a bad place to always sell into resistance. Ask questions later. You can always buy it back, but you may be getting the high tick. Anyway, this is Rich Lazaro, Stock Analyst Guru. Have a good night. Peace out.
Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. And this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. To hear more podcasts, you can visit our audio page at InvestorIdeas.com/audio. And a reminder, you can also hear our podcasts on Spotify, iTunes, TuneIn, Stitcher, Spreaker, iHeartRadio, and Google Play Music. To help you follow and track sectors, Investor Ideas has created stock directories of publicly traded stocks for investors to use as a research tool to start trading and investing. Visit www.investorideas.com/membership to learn more about our stock directories and leading sectors.